All right. Welcome everybody. And we just lost Vince, so hopefully he'll come back. Literally just had Vince on the line here. Another podcast talking about all things wonderful in real estate and mortgages this week. Vince is back now. He's on mute, but he'll take himself off mute here in a second. My name is Brad Brewer. I'm, of course, with Eagle Homes, powered by EXP. And I'm going to kick it to the mute boy.
Hey guys, I'm Vince Duvall with Eagle Homes, powered by EXP. I'm broadcasting from the North Woods in Lake Tomahawk today on a mini vacation, but didn't want to miss this great opportunity.
Adam Zeman, the mortgage guy with AZ Mortgage Team.
Awesome. So today's topics very much related, but we're going to take it from two different avenues. We're going to take it from the real estate side, and then we're going to take it from the lender side with our real estate or our lending expert here, Adam. Vince is going to go over some of the top reasons to buy today in today's market, and then Adam's going to take it from the lending side. So we're going to kick it right away over to Vince.
Good morning, everybody. Thanks, Brad. So I came up with 10 reasons why it's a great time to buy today. And a lot of us are, not a lot of us, some of you are still renting, right? So you're paying someone else's mortgage. You're paying down their principal, you're creating equity for them. So, number one, you're not paying down someone else's mortgage. And honestly, over the last 20 years, homes have appreciated 3 to 6%. Now, the last couple of years, it's been a lot higher. So homes appreciate on average 3 to 6%. So why not appreciate for yourself? Number two, tax savings and deducting interest paid and taxes paid from your income. Let's think about that. If you are able to reduce your income, that's less money you're paying to Uncle Sam over the life of over everything else. And then next, pride of ownership. I think this is huge for a lot of people that really want to get away from, living next door to somebody, below them, above them. But also now you can do your own landscaping. You can paint the interior of your house, change a light fixture, and even something as simple as hang a picture without asking your landlord. So, getting that pride of ownership. Starting to turn into a buyer's market. We're starting to see homes that are sitting on the market longer, days on market. We're starting to see price reductions, things like that. So it's starting to turn to your buyer's market. Less is more. There's less competition out there today. There's less people looking for homes for you, which means more time for you to make a decision on that home. You can sleep on it, not feel forced into buying something. There's less competition, gives you more opportunities. And with that, there's more inventory. So, over the last 3 months, starting to see anywhere from 200 to 300 more homes listed on a monthly basis than what's sold. So that's great. Inventory is starting to go up. Now, honestly, inventory is not at the numbers it was a year ago or a couple years ago, but it's starting to climb back up. It's still lower than our average, but it's going up. So this allows you to be a little more patient to find that home that fits all of your needs and wants. So that's awesome. Next, we can write an offer with contingencies. 90 days ago, the chances of you writing an offer with contingency were a lot less. And Adam could probably speak to that a little bit. He's probably seen more contingencies on mortgages that he's seen today and things like that. But when I talk about contingencies, we're talking about the home inspection, financing, potential sale of your current home, and even an appraisal contingency or well and septic. For us that are in Wisconsin, we have quite a few homes that have well and septic. So we'll get those inspected and checked out to ensure that we're not surprised by a huge repair down the road. So, we can write offers with contingencies that then allow us to be more comfortable with the home we're buying. 9 days ago, it was hard. It was really hard to do that. If you wrote an offer with the home sale contingency, more than likely a seller was going to the next offer that maybe was a little bit less or a little bit more, the same price, but didn't have that home sale contingency. With those contingencies, we can now request repairs. So when you request a repair, after the home inspection's done, you can go back to the seller and say, hey, seller, your window screens are ripped throughout the house. I'd really like you to fix them before we close. Or, hey, seller, the furnace not working correctly. We got it inspected by a professional. It needs a tune-up. Can you do that? So now you can kind of force the seller's hand to make the house move-in ready for you, and make it less money out of your pocket. Or we can ask for concessions. We can ask for money back at closing to do those repairs, or a reduction in list price or purchase price. So that's a great opportunity. And one of the last things, like I said, we're starting to see homes with price reductions sitting in the market longer. We can offer under asking price now. We're seeing over the last couple of months 2 to 4% purchases that are 2 to 4% less than list price, less than list price. So that's great. We don't have to go 5 to 10% over list price to get a home that we want. So that's a great opportunity for you as a buyer to really jump in there and be competitive and get something that you're comfortable with paying for. And then finally, interest rates. I mean, Adam's going to go into it here in a minute, but brokers like Adam have opportunities to get you, decently low interest rates, especially compared to the last 20 years. We're right at that, right at the average. We've talked about it for weeks now. Even though we're seeing interest rates 5 to 6%, that's still a great opportunity to get, appreciation on a house and get into the market and buy today. Questions, guys? I know I rambled through that. I'm sure I'm giving you a lot of opportunities to ask questions.
Yeah, you fired through all that. Those are all great points. Couple questions that came up for me that I'd love some additional clarification for our audience here is, when you said skipping contingencies, when things were kind of crazy, what were the top contingencies that you felt that, though you'd never recommend, of course, as an agent, what were the top contingencies that you saw that clients were not putting in their offers that they can now?
Yeah, man, the biggest one, Brad, is home inspections. Home inspections, well inspections, septic inspections. Those three things, those three inspections, you skip those, you could cost yourself tens of thousands of dollars, right? You could all of a sudden go into a home and find out that, wow, the roof is shot, it's been leaking. I need to get a roofer out here and replace it. The roofer comes on and goes, man, you got 3 layers on it and it's garbage. We need to tear it off. This is crap. And that's, so home inspections or even a septic could cost you $10,000 to $20,000. Get into a house and find out the septic's failed or the holding tank's failed. Now what are you gonna do? You have to have that. You have to have those things fixed. And as a buyer, that gives you leverage against the seller. If you get an inspection that says septic's failing or the roof's junk, it gives you a little bit of leverage to get that fixed and purchase that home or reduce the price. So those are probably the 3 biggest ones. And then a lot of people were forgoing home sale contingencies and hoping that they were hoping that they'd be able to sell their home and buy that next one. So I think those are a couple of the biggest ones out there.
That's I really liked your point on the home inspection. Things you mentioned there, I'm going to tie it to your number one point. When you're talking about what reasons to buy is paying down your own mortgage, homes appreciate. Boy, when we were in that advanced or really extreme seller's market, you could cost yourself a lot of potential equity coming into those major repairs that you were skipping over because of no inspection. So that kind of leads me to my next question for you. Is you mentioned that we're turning into a buyer's market. Are we officially in a buyer's market, do you think? Or are we still in that seller's market?
I think we're not officially into a buyer's market, compared to 5-6 years ago. I think we're still in a little bit of a seller's market. They can hold out. Sellers can hold out. They don't have to. They don't have to quite sell yet. When we were in a buyer's market, we were seeing homes sit on the market 60, 90 days, right? And I think as agents, we had to do a lot. It was a lot harder to get a house sold. We had to. Nowadays we're seeing it, and I've shown some of my buyers homes that you see professional photographers go in, and pictures make it look great, but walk in the house, you're like, holy cow, what did I just walk into, right? In a seller's market, you know, we could get away with that. We can get away with taking photos with our iPhones and Android phones. Nowadays, you know, we need to do every little bit of marketing to really push that home. And it goes back to what we talked about, you know, last week a little bit on selling your home and listing your home. But it's I don't think we're quite there yet, but we're starting to turn towards a little bit of that buyer sellers switch over.
Awesome. Great. Thanks for the updates. Adam, any questions for Vince on his topics?
No, I think you guys covered it pretty well.
Awesome.
All good reasons. I think you know, a couple things I want to tie into if you're kind of done.
Go ahead,
Adam. Let's.
I think probably one big thing I'd like to tie into is if you look at rent, you know, and the average rent, specifically if you've got a family and you're renting something that's maybe, you know, like an outside garage, kind of like a condo type apartment, you know, those are going for like $2,000, possibly more a month. And you could probably find a pretty nice house for that amount of money. Now, sometimes I think people are hesitant because they don't think their credit score is good enough. They don't think they have enough for the down payment. Those are probably the two biggest things that people have to overcome. And that's kind of into my next point. You can have lower credit scores. You know, there's programs available for that. So FHA allows for consumers to go down to 580 credit score with 3.5% down. Largely, you probably, to get an approval, you might have to have like a reserve, like 401k or something to that effect. But the actual down payment could be a gift from a relative, you know, mom, dad, brother, sister. So for someone thinking that they can't move because maybe their credit score is low or they don't have enough for the down, those are two options. You know, it's get in front of someone like me, you know, a mortgage professional. Give me a call, actually. Let me run the numbers. Let me figure out what's up. And if it's not today, let's figure out a plan for the future. Otherwise, you're going to be stuck in the same place in a year or two because you really don't have a plan. So kind of looking at, again, back to what rents are and then owning a home. And then to Vince's point, I think that appreciation. So when you rent something, you don't have any appreciation. All that money goes to that landlord and you don't get any of it back. When you purchase something, you have that appreciation. And if you get so lucky, like we did in the last 2 years, you might get a lot of appreciation through the course of that ownership and have the opportunity to maybe possibly refinance and get rid of mortgage insurance, so on and so forth. Back to the the programs. There is a program to go down to a 500 credit score with 10% down. So I just kind of want to throw that out there for people that may have the money, but they don't have the credit score. So again, get in front of me. Let's make the determination together. Don't make it on your own. Self-employed people. There's a lot of programs out there that are just opening up for people. I have a bank statement loan. What is that? That means I can take the average deposits for somebody that's been, you know, working as a self-employed person and use that as a derived income versus looking at their taxes, because a lot of times people tend to have a lot of write-offs in their taxes. So that could be an avenue for someone looking to purchase a home. It's usually a Band-Aid because the interest rates are a little higher and you're looking to get into it and maybe refinance down the road. And then rates. Let's talk about like kind of the elephant in the room. I mean, people all they're hearing is interest rates and the Fed is increasing it and inflation and the whole world burning. And I think a lot of that has people thinking maybe they don't want to move, or maybe their friends are saying, hey, the values are going to go down 20% this year or whatever. I've heard a lot of stuff. So first of all, values are not going to go down 20% this year. It's just not going to happen. Okay. I think, in my opinion, and I'll defer to Vince and Brad, I think we're just seeing it level off. I don't know that it's going to go down. I don't see that really happening personally. I think it's just, instead of going like this, it's just going like this. So that's a good thing for people that want to purchase a home. secondly, rates are still low for, we touched base on this, but they're still low for the average. And I have someone that I have to call right after this. Rates are like this, they're teeter-totter. So if you want a lower rate, you're going to spend more money. Okay. If you want just a regular, what we call par rate, you're going to spend no money. Okay. If you want money towards your closing costs, you're going to have a higher rate and you're going to get maybe a credit towards your closing costs. So the rate is yours. It's your rate. You determine where you want to be on this, not me. So yes, you can get a 5% interest rate, maybe even lower. What does that mean? You're going to have to pay points. What are points? Points are a percentage of the it's 1% of the loan amount. So when people say a point, your loan amount is, let's say $200,000, that's $2,000. If you think you're going to be in the home for X amount of time, spending that money might make sense. Typically it does. If you're going to be in the house for more than 12 months, 18 months, so on and so forth. So if you're thinking about buying, it's a great time to buy, in my opinion, because there's more homes for sale. Back to Vince, their contingencies the lack of contingencies is gone. I think that made me scared personally, when people didn't have contingencies and they were bringing a lot more money into the equation. And then you're a lot more likely to get approved for a mortgage right now with a lot of the guidelines loosening up. There's a lot of stuff that have loosened up recently that are allowing people to purchase that possibly couldn't purchase last year. So there's alternatives, there's ways. There are grant programs available. Those are a little tricky. I know there's a good Milwaukee County one, but I always tell people, shake down a relative. That's the easiest, best way. 401k, relative. If you want to buy a house, you could probably find the money. If you can't, let's try to come up with a solution. But people talk about WIDA, they hear that name, that WIDA, like that's not free money. That's just a second mortgage on your mortgage. So you're paying it back. There's no, you pay it now or you pay it later, but you're paying it back. So I'm not a lover of that program because it does lock you into that house for a certain amount of time. Hopefully you guys have any questions about that. I kind of went over a lot of that pretty quickly, and I know in the finance world a lot of it's complicated, and I probably underthink it.
I made a couple points here, Adam, and just kind of piggyback on some of the stuff you said, and then I do have a question for you. You'd mentioned it's an excellent point. Like certain situations, people get into credit issues, and sometimes that credit score doesn't recover as quickly as their ability to actually own homes. So you mentioned your 500 credit score, 10% down. Mm-hmm. Where do you caution people when they're planning? And I want to know this because the next thing I'm going to get into is that consultation piece that we do. So I want to definitely understand, like, what are some things that you caution people about when they're in that lower credit scores, but going to put the higher down payment, of the things they may not think about that they want to be prepared for. For as agents, I want to make sure that we're preparing them for a total financial look. You've mentioned you got to factor in property taxes, you have to factor in insurance, right? Mm-hmm. What are some other things that you like to talk about for preparing your clients that are maybe a little bit more of a difficult financial situation, one way or the other?
So I think I don't know if it's necessarily preparing them, but it's something, there's a reason why their credit score is a little lower. So you take a little extra time and scrub that and make sure that it does fit in the guidelines.
Sure.
You're typically looking for derogatories, and we may be looking for collections that are over a certain amount that are non-medical, or disputes on credit reports. Those are big ones.
Okay.
So the consultation is not necessarily different if you're 500 credit score versus a 700 credit score. You're just talking about that down payment, where it's coming from, how how to put that together properly. But after that, it's kind of the same. You're not going to get a 5% interest rate if you're a 520 credit score. Okay, so sure. That's just not happening. Here, I keep my FHA rates pretty low. So you're going to have a better FHA rate at a 550 credit score than you will anywhere else, you know, like locally at least. But you're not going to get the best. So they just kind of throw that out.
Okay.
And you're probably going to have to pay points. So you're probably looking at 10% plus maybe a point or two to get that interest rate, depending on what the market is. It's super volatile right now. I can tell you every day changes a lot. It's the last 6, 7 months has been very interesting to see the fluctuation in rates, and like one day they're really good and the other day they're not. So it's a little bit of timing on that too.
Okay.
But yeah, kind of long story short, there's not a ton of differences. It's just really scrubbing that person's file and make sure we got everything answered.
Yeah, because you had mentioned something, and we've gone over this in some of our previous podcasts, that about the consultation piece. There's the financial consultation piece with your lender, and then I know we've talked about this before, but one of our big things is we really want to take a really good amount of time to do a really deep consultation with our clients. I think we've talked about in the past that Vince asked me previously, how long should a buyer plan to have that consultation? How long should that take? And I say, well, plan an hour, but I've had them go an hour and a half, because we really want to take a deep dive and look at, planning, not only short term, but long term. Like, is this their first home? How long do they plan on being in the home? When they go to get that next home, maybe they have family growth or wealth growth, whatever decision drives that. What are they going to do with that current home? Are they going to sell it, or are they going to make it turn into an investment property and make some rental income? So, and then once we know the plan, coming up with the timeline, and understanding, are there factors with the economy or time of year, which we're going to go into, which I have a couple comments. I have a question for you next. And then lastly is the process. We want to really educate them on the process. What's going to happen each step of the way, including after the sale, and how we're going to make sure to try and stay in touch with them, to keep them in touch on where do they stand with equity. That will come back around to those plans that we're talking about, short-term and long-term. So those are a couple things that we do as far as consultation. I kind of wanted to get your piece on that, which you answered.
I guess for my consultation, it's very similar. I really tried to touch on the process, what to expect from us, what their expectations are, how quickly they need to get us stuff, and then costs. Like, what are the costs to getting a mortgage, and what are all these crazy numbers? What appraisal or homeowners insurance? They got to pay for that up front. Most people don't know that. Stuff like that. And then having a good relationship with an agent like you is really important also, because we can have an honest conversation and say, hey, maybe when the appraisal comes back or that inspection, it'd be really nice to get $1,000 or $2,000 in seller concessions. That I think that, and I'll kind of defer to you guys, I'm seeing those now. I think those are things you might be able to ask for depending on the situation, and that really can help that consumer bring in the minimum contribution, and obviously that's going to be a case by case basis. But I am seeing post accepted offers where appraisals came in higher, or contingencies, where we are getting maybe $2,000-$3,000 to help offset those costs.
Okay. And I'm going to make a couple other points regarding, because the whole conversation is, why is now a great time to buy? You can make an argument anytime, but one of the other reasons that we'll talk about today that come up a lot in questions is two things. You got election, your midterm election year. Elections, especially whether it's national and local level, tend to make people get in the state of, oh, should we wait? Should we not? What's going to happen? How's that going to impact interest rates? So on that side, I'm going to ask you is, historically, do you know how much elections affect interest rates leading up to November?
I don't. Never really looked at that. Okay. Been doing this 10 years, so I've seen, a lot of elections. I don't know. That's a great question.
I'm going to guess, if you don't know, probably hasn't been no impact.
Right. That's what I'm thinking. There's no real impact.
Okay.
I think what's impacting the economy right now, like you guys were making fun of me, you know, like when you wake up. Well, I watch CNBC every morning. Okay, every morning I watch what's happening in the news. What are the indicators coming out? What does that look like for our market? So here's what's affecting rates is obviously inflation. Until you get that under control, rates are not going to go lower. Period. That's it. What's affecting inflation? One of the biggest things is gas prices. Until we get that lower, it's just the Fed can hike the rate, you know, a million times, and these numbers just have to come down before that inflationary talk goes down and then rates go down. Now, if you get a 5.5, you know, rate today, you could probably likely refinance in 2 years into somewhere in the 4s. Okay, like you can't hold someone to that, but that's probably a likely scenario.
Okay. All right. That makes sense. And you mentioned appreciation, and we talked about appreciation as one of the reasons. The average appreciation in a normal market, which is Vince gave a good range, it's probably around just under 5%. Probably about a normal appreciation. And we're probably back to that. The other question we get a lot from the real estate side, and feel free to chime on any of the lender side of this on how people talk to you or ask questions, is recession. You know, there's argument right now, are we in a recession? Is one approaching? If we're not in one, one's likely approaching, we're due, just based on typical economic cycles. That's a whole nother topic for a different day. But a little stat from the real estate pricing side of things, the last 5 recessions, if you will, dating back to like the early 80s, late 70s, 2 where prices actually dipped. The other 3, appreciation stayed in basically the normal range of that 1 to 5% range. The 2 that there was actually a reduction where prices actually dropped on housing, one was less than 2% on average. We're talking a nationwide average here. And the other one, the one that was above 10%, which was actually 13% nationwide, was a real estate driven recession, which we've had conversations on in the past, back in the 08, 09, 10 area. Those were really the only 2, and only one was really a big dip. And of course, it was real estate driven. So, and there's a lot of things that changed that we've talked about in the past that probably prevent a lot of those things from going on in the future. Bad appraisals, lending practices, again, possible discussion for today. So as a buyer right now, you can feel pretty confident, obviously based on Adam's lack of response, there is probably no mid-year effect on interest rates. More of the interest rates would come from an economic standpoint, which would be inflation and potential recession. But the data still says that it's a really great time to buy. So there's your answer. Any other points from you, Adam or Vince? Questions?
I think my last point is, I think financially, it's a great time to buy. I think the things that are slowing people down is probably the emotional aspect of things, the uncertainty in the market. But I think if you can get past that, it's a great time to go look at homes. That there's just a lot more homes for sale, and you have more of the ability to bargain with people. So that's my take on things. I would rather personally buy a home right now than a year ago, if given the choice.
Yeah, good point. Adam, one question, and I'm not sure how you would answer this, or I'm gonna try. You mentioned if you were paying a $2,000 rent right now, what can $2,000 get you in a mortgage? Roughly, what are you seeing? I guess from your experience, are we seeing people with a $2,000 mortgage? And, right, there's a lot of other factors that are going to drive that. But if we're just looking at principal and interest, not taxes, not homeowners insurance, not HOA dues, condo dues, things like that, what could they potentially get with a $2,000?
Well, I mean, I think it's fair to put that at least taxes in there, because it does sway what areas you're looking at. But let's just take an average taxes outside of Milwaukee County. I think you're looking, I don't know, 2 to 275, 250. It really depends on a lot. Like there are some variables there, but if you want your payment to be $2,000 or $2,100, you're getting a decent house. you know, and again, specifically out of maybe counties that have really high tax brackets,
Right.
that's going to sway your payment $200-300 possibly. But yeah, you really are getting a nice house right now for the same amount as like a higher price rent. You know, in my area, the rents that are basically like condos, like they're like $2,500. You know, I mean, you're getting outside access, a garage, you know, like a little garage you can pull into, maybe some stainless steel, but you're still looking at like a 900 square foot place. It's not that special. Where you could possibly, you know, again, purchase a home. And back to what I was saying before, I think getting over the hurdles of my credit's bad or where's the down payment, those two are what's really, I think, preventing people from taking the next step.
Right. And so I think it goes back to some points we made earlier, right? Have a conversation with us as realtors, have a conversation with you as a lender, take the emotion out of it and start looking. I mean, it's never too early to start looking, right? We can look today and buy a year from now, or we can look today and have conversations and find out, wow, I can afford this. I can do this. I'm going to do it starting now. And I'm going to be living in my first home, my second home, whatever it might be, before Christmas.
Yeah.
So people just need to take that step. I think that's the hardest hurdle to get over is, you know, having that conversation. And that's, you know, honestly, I think one of the reasons we do these live Zoom calls and give people the information is because, you know, we don't want them to be afraid to take that step. We don't want them to be afraid to ask the questions that they're afraid to ask. We want to give them the information. So yeah, great topic today.
Awesome, guys. Well, anything else from you, Adam, or Vince? Any other additional mentions? Okay, perfect.
No.
Well, this has been live streamed to Facebook. I did go ahead and put our phone number to Eagle Homes as well as our website. Either one, you can contact us. Again, it all starts with a consultation, whether you're talking to Adam about a mortgage or you're talking to us about the actual buying process. It all starts with that consultation. Love to have it. Talk either long-term, short-term, or whatever. We're there for you. Adam, if you want to go ahead and hop onto Facebook and add your website to the comments, that would be awesome as well.
Will do.
Great. Anything
Awesome.
else?
Thanks, guys.
All right. Thanks, guys. Vince, have fun up north with the family.
Yeah, have fun.
Thanks.
Back in the office next week.
See you Monday, buddy.
See you guys.
Bye.